Let's begin with some news on the economy. The labor market appears to have slowed last month. The U.S. added 175,000 jobs in April, falling short of the expectations. Unemployment came in at 3.9%.
All right, so joining us now in Studio 57 is CBS News business analyst slash numbers nerd, Jill Schlesinger.
Yeah.
Do you like that?
Yeah.
Okay, we're all in favor of nerds. What do today's numbers say about the job market?
You know, it's very funny because we are couching this as, oh, it was below expectations. But you know what? I think this is like a magical report in many ways.
Okay.
And here's why. The economy is still producing jobs. We got 175,000 jobs. It is slower than what we've seen over the last 12 months, even the first few months of this year. But remember, the strength of the labor market has been a contributing factor to inflation remaining high.
Right.
And so I think when the Federal Reserve looks inside this report, they're going to say, okay, wage growth is slowing down a little bit. So we saw wages, annual average or hourly earnings up by 3.9% from a year ago. What do you really need to know about that is not the percentage, but that it's still ahead of the pace of inflation. And as long as your wages are growing faster than prices, you should feel in a better financial situation. So I think the Fed's going to like this report. And you know what? Investors think the Fed's going to like this report. So in the pre-markets, all the stock indexes are jumping higher right now.
Okay, that is a good indication. So Fed Chair Jerome Powell says that restoring price stability is essential to achieve a sustainably strong labor market. Excuse me, it's Friday?
I hear you.
Speaking like Friday language. Can we talk about that? How close are we to getting to that goal?
I think that this report gets us closer, but it is one report, right? Every time we get a report, there are then two revisions to that report.
That's true.
Right? So when we look at the last 2 months, they were revised slightly lower, but not by a lot. So 2 months ago, we had the revision was lower, but last month was a little higher. But overall, what Powell is kind of saying is, look, we don't like overheating in the job market because that leads to higher wages and competition. And as workers, you always think, of course I want higher wages. But if everyone's spending a lot of money with those extra dollars, it does contribute to inflation. So I think this is a report that could get us closer to price stability. But they're going to be looking at this report. They're also going to be looking at different measures of inflation. And they've got to see the trend in the right direction. I think until this report, frankly, we haven't had a lot of evidence that things are slowing down that much.
That's so true.
So it feels weird to say, like, we should be rooting a little bit for a slowdown. We want a slowdown, not a crash. How about that?
Yeah, that's what I was thinking. All I was thinking was slow and steady, slow and steady. You don't want to fall off a cliff. Just keep
like
it
if you're
easy.
going down the highway and it's 80 or 90 miles an hour, there's a much greater chance for an accident. If we are slowing down to 55 or 60, that's fine. That's just fine. It's just that we don't want to slow down to 0 because that would be bad.
Yes, you would get a ticket.
Exactly.
Thank you so much, Jill.
Sure.